Yeah, I think clearly it's been a very, very challenging year for petrochemical stocks, not just in Saudi, but regionally and globally as well. And I think there's sort of two factors here that are playing a part. You have the demand side, of course. You mentioned inflation, high energy prices. Naturally, this is going to put pressure on demand. And I think the other thing is, of course, a big structural slowdown in China. We're seeing much less import demand coming from China, and that's also, of course, putting pressure on the demand side. On the supply side, you also have quite a few issues. If you look the last 3 to 4 years, there's been a massive wave of capacity additions, particularly in China. And we're still seeing even more coming in the second half of this year as well. So it's been a lot of pressure on prices and margins, and stocks year to date are down 5 to 10% in Saudi Arabia and the sector because of that pricing pressure and the margin pressure. Yeah, absolutely. Yeah. First, maybe just to put, how important China is to the global growth engine. Our estimate is China represented probably 40 to 50% of the demand growth in petrochemicals in the last decade plus. So that obviously they're massive in terms of how much they consume every year. I think today you look at China, I mentioned they've got some structural problems. I think there's two parts to this. Obviously a manufacturing slowdown. You look at the Chinese PMI, it's been below 50, indicating contraction for most of the year. Even when it does rise above, it's very marginal. So manufacturing slowdown, and then you have a big issue with the real estate market as well. You're seeing prices are falling in real estate, sales are down double-digit % year on year. All of this is very negatively impacting petrochemical demand. Now, as far as the Saudi producers are concerned, they of course have a big competitive edge when you look globally in terms of cost. So they can always maintain their market share in China if they want to. They can compete with anybody. However, they've been trying to shift away from China. Why? Because pricing outside China is better. So Southeast Asia is offering, good $50, $100 premium to China. Europe in particular, Turkey. So we've seen a shift, but China remains a substantial portion of the export portfolio for Saudi producers, and I think it will continue to remain so, at least in the medium term. So I think, first of all, it's important to establish why is there such a strong relationship between oil and petrochemicals, and the answer is, the most common feedstock for petrochemical producers globally is naphtha. It's an oil derivative, follows oil. Thus, whenever oil moves, the marginal cost of production also moves up and down, and that of course impacts the petrochemical price. Your question is on volatility. As you can imagine, volatility also impacts demand very negatively because it creates uncertainty, it creates a lack of visibility. It becomes very hard as a buyer to take a decision, how much should I buy? Typically, you're not going to be building up a lot of inventory when there's uncertainty, because if something goes wrong, you're going to incur a very massive loss. So the volatility has created a situation where people are buying hand to mouth, meaning, when they see demand, they buy, but they're not really restocking or, so that's been the situation. So it's been challenging. And I think, sort of looking into the second half as far as pricing, I see more downside than upside at the moment, obviously because of the recent pullback in oil, down near 70 for Brent. Most likely we're going to continue to see further declines, at least in the short term. Excellent question. I think, very interesting looking at the manufacturing sector in Saudi Arabia in particular, referencing specifically the Vision 2030. If you look at back in 2016, you had about, I think, 7,200 factories within Saudi Arabia. Today, or end of 2023, that was 11,500 factories. And there's a target within the 2030 vision to reach 36,000 factories by 2035. Now, it's a very ambitious target, obviously, but the direction is very, very clear where we're headed. So I'm very constructive on the local demand in manufacturing. And of course, that's going to require materials. It's going to require chemicals that will drive and continue to drive petrochemical demand in Saudi Arabia, at least for the coming few years. Yeah, definitely. So, we talked about pricing a little bit, so I think pricing is headed a bit lower, but I think even on the cost side, One of the things a lot of the producers were talking about during their earnings conference calls was logistics costs. We've seen a big jump in logistics prices, shipping costs, particularly in the second quarter. The impact of that is mostly going to be felt in the third quarter. So logistics aren't a major part. I mean, when you compare it to feedstock cost, it's small, but still a negative factor. And unfortunately, when you look at the feedstock prices, propane, butane, the liquid side in Saudi Arabia, it has not fallen that much. It's pretty much flat actually, Q on Q, despite prices dropping and logistics rising. So it looks to me like the peak for margins and potentially profitability was the second quarter this year. And third quarter and second half is looking like it's going to be worse than the second quarter. So I'd expect a bit more pressure on profitability generally. Of course, there are exceptions. I think right now, the area we don't have a lot of visibility on is the demand side of the equation. So I think it's very important to keep track of macro factors, particularly in China. China's always, as I mentioned, been a big driver. Export growth, manufacturing growth, all of these indicators give you a sense of where the macro is headed. And at the moment, the signal is kind of neutral, so it could go one way or the other. I think on the supply side, unfortunately, there's not much uncertainty. It's clear there's a lot of supply coming, so there's not much to do on that side. But yeah, I think the global macro situation over the next 6 months is most likely going to be the largest factor dictating what's going to happen with the price movements.